All right, everybody, welcome back. So in this video, we're going to continue with a video that I started the other day, confirming the trend, introduction to market breadth. So there was a question about how do we set these charts up so that we can use this information, right? So right now, let's just go to a regular market symbol. We'll use Apple. Right now, we're just looking at a 5-day, 5-minute stock chart, right? Nothing really complicated. It's showing Globex and regular trading hours, and it's just a normal chart. But what we want to do is we want to look at some of these market breadth tools. Now, we're only going to mark out a few. It'll give you the idea of what we're doing, and then you can kind of extrapolate from there and build your own charts out from that. So we want to use one of the most popular, the NYSE, so New York Stock Exchange. And what we want to look at is advancing minus declining issues. Now, issues are companies. And what this is a formula of advancing issues minus the declining issues. And then that gives us a number. So we'll go ahead and we'll look at that. The symbol is ADD, the NYSE advancing issues minus declining issues difference. And that's that last D is why it's called ADD, advancing declining differences. All right. So one thing worth really noticing from the beginning of all of this is that there is a zero line. That's really one piece of the puzzle. And then another piece is that how many issues are in the NYSE. Now for that one, we don't need to get too extreme when we use something like the NASDAQ 100 or the S&P 100. Then we've got a much more precise and specific number to focus on. For the ADD being such a big number, we don't want to get all down into the weeds and get into the thousands of issues, right? It's going to be too much. Let's just get this tool set up. We've got other tools. All right, so the ADD, if we take it out to a daily and we start looking at, where was some of the maxes at in the last year? We can see 2,500, 2,600. That's a lot, right? So if it's a really big day, if it's a day where things are just running in crazy extreme ways, what would a maximum number be? Somewhere above 25. So that would be like crazy super extreme. And to the downside, minus 25 would be crazy super extreme. Now we know what the absolute edges are. If we take 2,500 and we cut it in half, maybe 12 and a half. That would give us a baseline, a starting point for maybe a more normalized day. A good up day, but not overly crazy, or a good down day, not overly crazy. And then we've still got that midpoint, the zero line. So whether we're above it or below it is going to be important. And then whether we're past that 1,250 threshold or not will be important. That's going to be kind of the views that we want. So on thinkorswim, as with most charting platforms, we got the drawing tools. If I press my mouse wheel, not roll the wheel, but press down on the mouse wheel, I get this little short menu. If you don't want to use that, maybe you're on a laptop, then you can come down here and you can use the menu through this area. But we want to use these drawing tools so that we can build something that looks a little bit like that. Now I've got these different lines set up, 500, 1,000, 1,500, 2,000, and the same thing going in the negative direction. All I did is use the drawing tool, drew them out, and then changed their colors to various colors to kind of offset what it is that we're looking at. Now here on this daily, it's pretty loud, right? It's not really helpful. We take that down into the intraday, and now we've got some structure behind it. So that's looking pretty good. This would give us context, right? If we opened all the way down at minus or if we closed on the day down at minus 2,000 and then we opened on the day above 1,000, that would show, a pretty strong reversal in the markets, but it wasn't able to keep it, and we sold off all day, got back below zero by the end of the day. It's giving us context, right? A way to see where's the breadth at. So those lines are just set up by using your drawing tool, something like price level. And if you wanted to, you could even add different colors like this, right? You could use the rectangle, and then you can just put a box on there and provide it with different colors to kind of give you a gradient of the strength of the move, right? You can see how the green got darker or brighter as we went higher up, and the red the same way. It's a bit noisy though, right? You can just see how all those lines just kind of overlap. Of course, we can always turn it off. There's with the numbers actually applied, and there we turn it all off. So there's different ways to do this. You're going to want to use the drawing tools in a way that provides you with insight and doesn't distract you from what you're trying to do, right? When things get maybe a little too complicated or a little too loud, it tends to draw too much of our attention, and then we lose sight of what we're doing somewhere else. Two of the main market breadth tools that I like to use is up minus down volume and up minus down issues. Between those two, you've got a really good idea of how many companies are moving to the upside versus how many are moving to the downside. And then the scope of that volume. How much net buying do you have versus net selling? And that's a fantastic way to get an idea of what's going on. So this is how you would set up your charts. There's not really a time frame that is too specific. So I wouldn't get hung up on, do I need to see this on a 5 minute, a 1 minute, a 10 minute, a 30 minute? Because at the end of the day, it's cumulative, right? It's adding up these numbers. And so no matter what time frame you're on, the number is still going to be the same. So just to kind of give you an idea of what I mean by that, the ADS-PD closed at minus 150. Well, that number would still be 150 if I was on a 15-minute chart or a 60-minute chart or a 30-minute chart. It would still say 150, right? And that wouldn't change because it's cumulative. So I don't want you guys to get hung up on any sort of pattern or shape, right? We're not looking for head and shoulders, cup and handles, dojis, anything like that. We're not looking for trend lines or none of that. Just where are we at and in which direction is it moving? So for an example, Friday, we were just really sideways and chopping about. Same thing with Thursday. We really didn't do much. But look at Wednesday. We just had FOMC, and we had this significant drop to the downside. And it was consistent and persistent. From 2 o'clock all the way to the close, we just kept driving down lower, 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 lower. So it had a direction to it. It was defined. And on any time frame, we could see that continuing to move lower. There are a lot of different market breadths out there. One thing that I like to do is that you can jump around to different ones. If it's a crazy bullish day or a crazy bullish bearish day, you're going to see that signal on every single market breadth tool that you look at. Those are the days where we really confirm the trend, right? When we look at every tool we have and they all say bullish or they all say bearish, it's the days where we get discrepancy, right? Maybe the Russell is giving us a lot of buying volume and the NASDAQ showing a lot of selling volume, and the S&P is around zero because it's got an equal amount of net buying and net selling, and it's just really not going anywhere. That's a really divergent day. That would be a day where maybe we would step back and kind of remove ourselves from the equation, realizing that there's just too many mixed signals that isn't offering us any conviction in the trade. So with that in mind, if you was to just jump around through all of the different tools, go in here and go to indicators, and you can see all these different ones out there. Then finding all of them bullish or bearish would really kind of highlight and validate that bias. It's a pretty rare thing too, if you think about it, to have such a strong bias in the market where all the signals are in agreement like that. So that's it. That is setting up the charts. It's really nothing to it, right? You don't need any special indicators or anything like that. I use the different levels. I go in and I create a drawing level, new drawing set. I give it a name like this, like markers, and then I go in and I use the rectangles and the lines, and I just provide myself with a little clarity. This looks really crazy when we look at it like this, but when I make a grid like this and it's just tucked up in the corner there, it's not so bad, right? And then it has more context to it in the daytime. When I'm watching that, I'm watching other things. Of course, I like to turn it into a line rather than having candles, but that visual is more than enough, and it's just not so bad, right? It's not so loud as it is in this picture. So that's it, guys. I hope this video kind of helps put things into context for you, and that you find some value out of these tools, because when we do get that strong agreement across all of the breadth tools that we have out there, that's a day that you really want to take advantage of whatever direction the market is giving you. Appreciate your time, and I'll see you at the next one.